Well, hello everyone. Welcome to Altius Investech. This is Abhishek Ginodia, our co-founder. Could you give us a quick introduction of yourself?
Sure. So, hi everyone. My name is Abhishek Ginodia. I'm the co-founder of Altius Investech, and Altius has been into the wealth management and investment space for about a decade now. The idea with which we founded Altius was to find opportunities in the private markets, which give you alpha in your portfolio, and we've been successfully doing that for over 100 companies now. Uh, about 20-25 of our portfolio companies have gone for an IPO. Some of the companies which we worked in earlier were companies like Bira, Nazara Technologies, Barbecue Nation, ICICI Prudential, so on and so forth. We also assist companies with creating ESOP liquidity solutions, which allow people to access liquidity before the company actually goes for an IPO. On the investors front, we typically find opportunities wherein we feel that the risk return reward ratio is much more skewed in the direction of the investor.
So we're starting three new verticals at Altius Investech, the first one being estate planning. So why is estate planning important?
So, estate planning is basically structuring how your assets will be treated either during your life or post your departure. Now, typically, there are two ways in which estate planning is done, and it is either through a will or through a trust.
So there's two different things.
Right.
So what's the difference?
Okay. So, a will is something which you create in which you conceptualize what will happen to the assets which you own after your demise. So, basically, you can tell that what assets will go to my children, what assets will go to my wife, spouse, or what assets will go to my company, charity, whatever it is. But a will typically comes into effect after the person who's making the will passes away. A trust is a neutral entity. It's a new entity which is created to help designate what can happen even during your lifetime. So that has a much more nuanced solution set as compared to will.
Okay. So when should you make a will versus when should you make a trust?
Perfect. So I think before that, I would like to answer why typically wills are important, right? So I think one reason why will is important is in India, typically no one creates a will as of date. So it's something which is a new concept in a very, very nascent stage. And why that is important is because even when you are wanting to pass down any assets which you own right now to your future generations, it is very difficult unless you have a document which concisely states what were your wishes. And largely any institution, so say if you have a mutual fund holding or you have a fixed deposit with your bank or you have a life insurance policy, any of that money to actually pass on to your successors will need a will for it to happen smoothly, right? We have seen cases wherein there have been instances wherein there is only one son and the person who passed away had a wife, but even then there were about 8 to 12 month delays in getting the money from claimed from the bank, even though there was no contest to the money which was being passed on to the son. But because the institution did not have a will, the family had to go through a probate mechanism, which takes about 7 to 8 months and costs almost 1.5 lakh rupees. So imagine having a 5 lakh rupee FD and needing to put in another lakh rupee to claim a 5 lakh rupee FD, and that also after 6 months.
Yeah.
And that's why a very simple document which costs absolutely nothing is so essential to be created when you are competent, when you are still capacitated.
So why is family trust important? What if I don't have that much money to be a trust fund family?
Absolutely. So I think trust fund decision to make or not make doesn't really depend upon how much money you have. It really depends upon what kind of situation you're going through. So the cases wherein we typically want a family trust to be made is cases like wherein there is a huge asset to be deployed later on, or there is a special needs situation child wherein there might be some educational or medical condition through which the child is going, and therefore a regular payout is required to give a medical assistance. Third can be if there are marital disputes. So a trust is something which insulates a certain amount of money into the family and ensures that your assets do not get impacted because of your marital disputes. Trust can also be for a very simple example. Say if you have a decent amount of wealth and you have only two children who are, say, minors right now. Say, let's take for an example if they are 6 years old. And if at this age, for some reason, you pass away, and if those assets get transferred to your children, they will actually not know what to do with the money, irrespective of how much money that is. Even if it's 5 crore rupees, they will not know what to do with it. And it is highly likely that they might not use it in the best way possible, and may burn through it in the next couple of years, which actually leaves them high and dry for later on. So what a trust helps you to do is define that whatever money has been parked inside the trust, that can be used in a certain way till you are alive, and in case you pass away, post that there'll be a trustee who will still ensure that there are logical, timely disbursements of the money which is in the trust, which ensures that your future generations are well covered.
So, can you make both a will and a trust?
Absolutely. So I think a will and a trust both are used typically in conjunction. So either it can be a pure trust wherein you have parked in a portion of your assets, or it can be a will plus a trust wherein the will guides what money goes into the trust later on, but a trust is still there while you are living to guide a certain portion of the funds as to what can be the distribution when you're alive and also later onwards. And some people even go for a little more complicated trust situations. So there can be a trust which actually feeds into a trust which is made separately for your children. So fit for people with say 50 crore plus in assets, these kind of situations or these kind of structures help them really plan and isolate money, so that say if your son is old, is young right now, but you don't know 10 years later who he will marry and what will happen to that marriage, and there is a fair bit of chance that he might actually end up spoiling all your wealth. A trust in such a situation will ensure that at least a portion of the wealth is being secured for him or his future generations, and the rest of it can actually be uh, inherited by him entirely on your device.
So, you suggest you do both will and trust right now, no matter
So
what age you are?
that's so typically what we suggest is a will and a trust is dependent upon the situation, how complex the financials are, what your family structure is, what your needs are. But largely it should get created anytime that you cross a age barrier of 35, wherein you have accumulated some assets, and it is a time when you can actually uh, think what the next 20 years of your life is going to look like. And these can be updated, right? I mean, updating a will is as simple as writing an email, because you just do the list of assets which you have, you redo the list on how the distributions will happen, you sign a fresh document, and that's it. So it is not really a very elongated process that you need to think that let's delay this out for as long as possible. That's what we want to arrive at.
So, a lot of our clients give an example like, hey, I've added a nominee on my bank account and even on accounts at Altius. So, is that the same thing? Like, do they just get the money if they die?
So that's a very, very common misconception. The fact that you've added a nominee does not ensure that your passover of assets will be smooth. The institution will still ask you for a probate. It will still ask you to get a court order that you are the real holder of the assets, because the institution doesn't know what your wishes in the will were. So there can be a situation that if you have 3 kids and you have made nominee of any one of them, the institution, the bank, or the mutual fund will still not be able to transfer the units of the money to the particular nominee. It will still need a will. If it is a will, it will be a very smooth process.
Okay.
But in case if it does not have a will, then you actually have to go to a court. You have to come out with a probate. Probate is there in most states, and then you have to again approach the institution, which will then release your money to you.
So, what is the difference between a nominee and a beneficiary?
Okay. So nominee is what you define to an institution. So आप अपने बैंक को बोलते हो कि ये एफडी के अगेंस्ट द नॉमिनी इज मिस्टर एक्स. Beneficiary is someone who you have named in your trust or your will. So you could have had named your wife in your FD, but the will might say that I'm leaving all my assets to my children. So that is the difference. So you have told that in absence of anything, use this person as the uh, 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 first option. But in case if that is not there, then you depend upon the will.
So, what is the process of setting up a trust?
Okay. So typically a trust is a individual entity. तो जैसे आपका पैन कार्ड है, जैसे आपके नाम पे ITR फाइल हो रहा है, वैसे ट्रस्ट इज गाइडेड बाय अ लॉ and it is created as a new entity in the eyes of the law. Then you have to make a irrevocable gift to the trust. So मान लेते हैं I as an individual I have 20 crores of net worth. I will create a trust which will be, say, Abhishek Ginodia Trust. And that to that trust, I will park some 1 CR of money. And then the trust will invest that money according to the trust deed. So the first step is to create a trust document which will guide on how the trust will operate. Then we create a trust bank account, a trust demat account. We create a trustee's nominee, and then we define how the money will be invested and how the money will be distributed, and who will take care of the money after the executor of the trust has passed away. So say if I've created the trust and if I pass away, there'll be a trustee who can be a family member, who can be a corporate trustee, who will decide what happens to the money in the trust post the person's demise.
So, how long does the whole process take to set up a family trust?
Sure. So, depending upon the complexity, generally 30 to 40 days is a general timeline. The first 10-15 days is where we discuss and understand what your requirements are. So, there may be a need to distribute assets on a regular basis. There may be a need to include charities. So all of those are understood and created into a scope document. Once the scope document is there, then it is used to create a formal trust deed, do the filings with the necessary authorities, and typically the entire trust setup gets done within the next 30 to 40 days period.
So, what are some other benefits of a trust other than just passing on wealth?
Absolutely. I think two critical benefits. The first is inheritance tax. India, as of date, does not have an inheritance tax. बट इफ यू लुक एट अदर कंट्रीज, जैसे अगर आप यूएस देखो या आप यूरोपियन कंट्रीज देखो, तो टिपिकली 10 से 40% इज योर इनहेरिटेंस टैक्स. सो आपने जो टैक्स पे करके वेल्थ बनाया, उसको जब आपने सिर्फ अपने फ्यूचर जनरेशन को पास ऑन किया, दे विल चार्ज ऑलमोस्ट 20-25% टैक्स ऑन दैट वैल्यू ऑल्सो. But if you create a trust and if it is an irrevocable trust, then in that case it is considered as a gift which is non-taxable, and even when the trust is passing money on to its beneficiaries, it is non-taxable. And the expectation and the general legal consensus is, in case India में inheritance tax बाद में भी आता है, all trust structures will still have the benefit of not being subject to any inheritance tax. So that's a very critical benefit. The second critical benefit is, say if you are in a line of business जहाँ पे there is a chance कि आपके ऊपर कोई कोर्ट केस आ जाए या आपके बहुत क्रेडिटर्स है, तो उनका जो क्लेम आता है वो आपके एसेट्स पे आता है. बट वट एवर फंड और वट एवर एसेट्स यू ट्रांसफर टू अ ट्रस्ट, दे आर नो लॉन्गर सब्जेक्ट टू बीइंग encroached by these these creditors or by courts. So आपका जो trust है, that actually isolates a portion of your assets, that in case, on a bad day, if for some reason you're tangled into a legal trouble, or you have a lot of debt for some reason later in your life, your trust money still stays separate from your own funds, and whatever court cases or whatever liabilities arise, it will come on your funds and not on the trust money. So it is a very nice way to ensure that some kitty is always there which cannot be touched by anyone for your future generations.
That makes sense. So the second new vertical we're starting is mutual funds. And mutual funds has been there honestly forever. Everyone knows it. I have the jingle in my head at all times. What is Altius Investech doing differently?
Okay. So I think largely what we felt is that the typical problem with mutual fund is over diversification and not under diversification. We've seen client portfolios with 30-40 mutual funds and purely equity based portfolio, and half of their portfolio was overlapping with the same stocks. So our thesis at Altius on mutual funds is very simple. We did an analysis and we realized that 80% of your gains does not come from selecting the right fund. It comes for selecting the right asset. राइट एसेट का मतलब है कि क्या इस साल आपको डेट में डालना चाहिए, इक्विटी में डालना चाहिए, गोल्ड में डालना चाहिए, रियल एस्टेट में डालना चाहिए. बिकॉज if you look at what return which asset has given in which year, that identification is the largest contributor to your overall portfolio return. There have been periods, 3-4 साल का period, जहां पे mid caps have not given any return. So what this means is that in those 3 years, if I invested in any mid cap mutual fund, I would have not made any returns.
Correct.
Right? And if during that period gold has done well, then if I've missed out on gold, there is no way I can have a realistically differential alpha on my portfolio than what the typical market is giving. So the first thing that we do differently is we try and figure out which asset is the most opportune asset at this given point of time. And we keep doing this exercise on a quarterly basis, wherein we keep reevaluating which asset is now in its uh, takeoff cycle and which asset class has now peaked out in terms of valuation or in terms of cyclicality. And therefore, we select the right asset to invest into. Then comes the selection of the right fund. The right fund is a very difficult uh, choice. What has been again seen is typically people select the fund by looking at past returns. And there is a very clear cut study that once the fund has given the best 3 year return, it has actually underperformed in the next 3 years. So you cannot look at the previous 3 year returns and decide which fund you should invest into. You have to understand what the fund manager is thinking, how does he plan to deploy the money, and then you have to accordingly select the fund. एक एग्जाम्पल लेते हैं. In September to December, largely all flexi caps gave minus 10 to minus 15% returns.
Oh my God.
Only one fund has done really well, and that was Parag Parikh Flexi Cap. The differential thought was Parag Parikh decided to sit on cash. उन्होंने अपने small cap and mid cap portfolio mein, as soon as they felt that it is now overvalued, they actually liquidated a significant portion of their portfolio and they deployed it into liquid mutual funds. Now the problem is 90% of fund managers cannot take this call because it is difficult to lose than to not perform very good. What I mean to say is आप 20% नहीं बनाओ वो मार्केट को चलता है, बट आपने निफ्टी को अंडर परफॉर्म कर लिया तो एक फंड मैनेजर की जॉब खतरे में आ जाती है. सो देयरफॉर we try and find fund managers who are not subject to such connotations and can actually take contrarian calls. When they feel that the market is overvalued, they will actually exit and sit on cash, and when the time is good, they will again re-enter into the market. Third is, I think, a regular review is extremely critical. एंड फोर्थ, टैक्स ऑप्टिमाइजेशन. आज के दिन कौन से एमएफ में कैसे एक्सपोजर लिया जाए, दैट लार्जली impacts on how your portfolio returns will look like. For an example, आपने एक डेट फंड में इन्वेस्ट कर लिया. Now that debt fund in today's tax slab will cost you a marginal tax rate. But if we shuffled that debt investment via an arbitrage fund or via hybrid fund, you will be actually subject to equity taxation, which actually pulls down your overall tax bill by 20%.
Oh, very cool.
So that is the kind of inputs that we try and make into this particular portfolio management space.
So in these fluctuating markets, are there some funds you think we should invest in?
So I think the answer to this question basically depends upon कि आज के दिन मार्केट का क्या वैल्यूएशन है. So one quick metric which people should look at is the price to earning of the market. तो निफ्टी का PE जब 20 के नीचे है, 20 के अंडर है, at that time we typically think it is safe to go large on equity. तो ऐसे समय में people should invest more on equity. Large cap, small cap, mid cap, that allocation can vary कि sectorally कैसा multiple चल रहा है. But equity allocation should be high. Large cap can be a higher contribution. Mid cap, small cap can be smaller contributions. अगर ऐसा feeling है कि market is rising, but the selling pressure is still there. जैसे कभी कभी होता है कि FIIs are still selling a lot of shares. So उन cases में it might also be sensible to have some allocation into arbitrage or debt. क्योंकि these funds will give us an option to re-enter into equity at a more logical time point.
So do you have top 5 mutual funds you should invest in?
So I think top 5 is a difficult question to answer, but how we look at it is if you are clear on which category you want to play in. So अगर आपको large cap fund में जाना है तो you can look at good names like Axis Long Term Equity, you can look at Canara Robeco. In the debt segment, typically Nippon has done well, Franklin Templeton has then done well. For arbitrage, you can look at Kotak and Invesco arbitrage funds. For flexi cap, we typically have liked Parag Parikh's flexi cap fund a lot, and it shows in the numbers also. बट लार्जली द डिसीजन हैज टू बी मेड ऑन द बेसिस ऑफ कि आपको कौन से एसेट क्लास में काम करना है, एंड देन यू लुक फॉर दीज फंड्स अंडर दोस एसेट क्लासेस.
You were also talking about having different goals in life and how you should invest based on that. Should you also do that for mutual funds?
Absolutely. So what we feel is that the choice of fund which you invest has to tie up with the goal. So money which I am investing for retirement, जो मुझे आज से अगले 15-20 साल नहीं required है, that has a very long term nature, and उसमें we should rather look at equity rather than anything else, because equity fluctuations will happen for a 2-3 year period, but 10-15 साल में it will give you a very good nice rounded return. अगर आप रिटायरमेंट फंड के जगह आप हेल्थ फंड में देख रहे हो या आप इमरजेंसी फंड देख रहे हो, दैट मनी शुड बी इन लिक्विड इंस्ट्रूमेंट्स. इट कैन बी एन आर्बिट्राज फंड, इट कैन बी अ शॉर्ट टर्म लिक्विडिटी फंड, बिकॉज आपको यहाँ पे ऐसे पैसे नहीं चाहिए जो टाई अप हो जाए. यू वांट इंस्टेंट एक्सेस टू दीज फंड्स. If you have goals like travel, which you can time out, that can be put into a hybrid or a flexi cap structure so that you can take benefit of the entire market as a whole.
So should I invest in a bulk amount at one time or should I do SIPs?
So I think this depends upon how your cash flow is. अगर ऐसा है कि आज आप एक बड़े अमाउंट पे बैठे हो and that is just sitting in your bank, what you should do is you should do a lump sum, invest largely in a diversified portfolio which has equity, debt, gold, real estate in the form of REITs, and invest it all today, and whatever you want to keep cash, you can park it into a liquid fund or an arbitrage fund. If your cash flow is from a regular pay in, so you get a monthly salary, you get a monthly commission, you get a monthly bonus check, and if you want to deploy that, then SIP is typically the best strategy, because that is something which ensures कि आपका wealth regularly systematically invest हो रहा है, and आपको ज़्यादा सोचना नहीं है कि आज किस में डालना है, किस में नहीं डालना है. तो अगर रेगुलर कैश फ्लो है तो गो फॉर SIP. अगर आपका कैश फ्लो इरेगुलर है तो देन यू शुड डू अ लंप सम. यू शुड थिंक अबाउट विच एसेट इज गुड, एंड उस एसेट्स में आप एक एलोकेशन बना के इन्वेस्ट करके पार्क कर सकते हैं.
So what if I have a very specific goal in mind? Let's say I want to buy a Ferrari and I want to do it via mutual funds. Is that a possibility?
So I think absolutely relevant question. So you have to look at it from a holistic wealth perspective, right? आप अपने नेटवर्थ का 100% तो गाड़ी में डालेंगे नहीं.
No.
सो अगर आपको एक 5 करोड़ की गाड़ी लेनी है तो यू वुड वांट टू बी वर्थ 100 करोड़, राइट? सो नाउ इफ यू वांट टू बी वर्थ 100 करोड़, यू हैव टू अंडरस्टैंड कि आज से कितना इन्वेस्टमेंट आपको स्टार्ट करना पड़ेगा, दैट in the next 10 years, 15 years, 20 years, you will be able to get to that number. And how do you get to that number is when you decide that agar I can start constructing a portfolio today, and that portfolio generally gives you a 15 से 20% का return, how many years will it take me to get to a 100 crore figure? Basis that figure, you have to start investing both as a lump sum and as an SIP, and in the relevant instruments which can give you that 15-17% compounding. There is a very interesting way to calculate this.
Yes.
Any money which you invest today, say if you are investing at 24%, then if you divide 72 by 24, you will get the number of years in which it will double. So अगर आप आज के दिन 1 लाख रुपए 24% पे इन्वेस्ट कर रहे हैं तो 72 by 24 3. So in 3 years your money would have doubled. अगर आपने वही पैसे को 12% पे इन्वेस्ट किया है, if you invested at 12%, then it will take 6 years to double.
Correct.
And if you have invested in an FD, then it will take 12 years to double. तो it is a very simple way to understand कि अगर मेरे को एक X फिगर तक पहुंचना है तो मुझे आज कितना पैसा कितने रिस्क पे डिप्लॉय करना है. So अगर आपका रिस्क एपेटाइट ज़्यादा नहीं है and your starting level is high, then in that case you can actually go for safer instruments. But if you are wanting to target a larger sum and your time period is long, then you can look at higher yielding assets which can be parked over a very long period of time to give you that scalable returns.
So for young people, this would be the time to take the riskier investment decisions because it's for a longer time.
Yeah. So when you're young, you are having a cash flow. You're not dependent upon income from investments to fund your lifestyle, right? Therefore, at this time, whatever savings you're doing, ideally, ये आपको equity की तरफ redirect करना चाहिए, because that money can stay invested for the next 10, 12, 15 years. But say someone who's closer to retirement, and that person is actually depending upon his investment to run his daily lifestyle, for them equity exposure has to be limited. We are not saying no, but it cannot be 90% equity 10% debt. There has to be a logical mix so that कल को ऐसा कोई fall आ गया market में 30% market गिर गया तो your corpus cannot go down by 30%, right? So it depends upon the life cycle, but for young earning adults it should be a very large equity allocation in our opinion.
So, why do investors always keep talking about compounding in case of investing?
Okay, so I think compounding is a eighth wonder of the world because the kind of returns or the kind of results that you get by just being consistent over a long time span is phenomenally different than if you were very, very lucky or very, very smart over a short period of time. So, just to give you an example, a 1 crore rupee invested today at 7% interest, which is your typical bank FD interest,
Correct.
would get you some 15-16 crores at the end of 40 years. 40 साल बाद 7% पे 1 करोड़ रुपए बनेंगे 15 करोड़ रुपए. अगर a smart investor is able to figure out a way that in the stock market he can achieve a 26% return, which is not unheard of, he will be sitting on 10,400 crore rupees at the end of 40 years. So the difference is between a net amount of 15 crores and a net amount of 10,400 crores. Now let's break it down in a real life example. मान लेते हैं आज आपके पास 5 लाख रुपए है. अब आपने 5 लाख रुपए बैंक एफडी में डाल दिया एंड आप भूल गए कि आपने बैंक एफडी किया था, एंड एट योर रिटायरमेंट आफ्टर 40 years of age, when you look at the money, you will find only 15 crore rupees or 15 lakh rupees to be there if you had invested 1 lakh rupee today.
Okay.
If you had instead put it in a PMS or an AIF or a mutual fund, wherein by God's grace, if you were able to generate 25-26% over a long time span, then you would be sitting on 103 crore rupees. That is the kind of difference that you will generate by investing for a long period of time at a higher IRR value.
So, how does real estate versus equity work as an investor?
So I think real estate is an excellent uh, allocation to be done in your, and it should be a meaningful allocation as a part of your overall portfolio. And largely what we feel is that your self-occupied real estate is not an investment because you're staying in that, you'll not be able to sell that. But let's look at what real estate returns people have generated in the past. So let's take an example that if you were the most shrewd investor and you invested in a property in Bandra in Mumbai in 1985, at that point of time, the per square foot price in Bandra was 850 rupees per square foot.
Only, oh my god.
Only, yeah. Today, I think it would be upwards of 2 lakh rupees a square foot, right? Now, in your opinion, what would be the return someone would have generated by investing in a Bandra flat in 1985?
I don't know, a few crores.
No, in terms of percentage.
Oh, 20?
Only 13.9%. So 13.9% is something which any person who is consistent and logical is able to very comfortably generate in the stock market. So the problem with real estate is that the check size is large, the liquidity is low, and the fungibility and saleability is really limited. So tomorrow, if I wanted to utilize proceeds from my flat to buy something else or for a medical expense, it will be a little difficult for me to liquidate. But stocks and mutual funds actually give you the option of getting liquidity instantly.
Yeah.
So if the best possible place to invest would have only given you 14% interest over the last 40 years and a stock portfolio would have given a better return, then we typically prefer investing into assets which have higher return with a higher liquidity because we place a premium on liquidity as well.
Yeah. So you were talking about Warren Buffett. So what are some things you've learned from him or what has worked for you reading about him?
So I think there is a lot of literature on Warren Buffett and Charlie Munger across the internet. People follow them religiously.
Correct.
But one quote which is stuck with me really well is, it is an insane amount of advantage that one person has in the long term by not being stupid, then being extremely smart. What he intends to put forward in that is you just have to do simple things. You can just invest in simple items, simple mutual funds, do it consistently and not gamble away your money. So don't take a very large portion of your portfolio into crypto because that can go to zero. So as long as you're not doing anything very stupid, your advantage over someone who's actively managing money will still be much higher over a long term period, because passive investments just in form of managed funds do extremely well over a longer period of time. So I think that's our core philosophy which we like to cover for retail investors.
So, what are the three things you look for when researching a company or investing into a company?
Okay. So I think the top three things which we look for, the first will definitely be a superior business, right? So what you're investing in, essentially you should feel like this is one company I would like to own.
Yeah.
That feeling, if you're getting from a company, that essentially shows you that the company's business is superior. It has a defensible moat. Tomorrow some new competitor can't come and disrupt the entire business. It can have a cost advantage, it can have a design advantage, it can have a technological advantage, or it can simply be the best at what it does. But the point is that the business has to be actually superior. The second thing that we look at is management. And when we say management, we value corporate governance more than competent.
Okay.
The fact that the management should be in a position to allow retail investors to also make money in the stock and not have any shred of so in case of management, what we feel is we place a lot of weight on there being extremely high levels of corporate governance. So there should not be any cases where there is cases of siphoning off of funds, or a very complicated subsidiary holding structure which we are not able to understand. And the third and the most critical is getting in at the right pricing. So there is no alternative to that. आपने एक बहुत अच्छा बिजनेस खरीदा बट आपने 100x की पी में खरीद लिया, द odds of making money from there is very low. आपने एक moderate business खरीदा but you entered at a very reasonable pricing, the odds of you still making a decent returns are much better. So if everything is okay, if the business is good, the management is good, then the third large criteria is getting the price right.
So the third part is getting the
Is
price
very
right.
critical. Yes.
Everything about mutual funds is great. Is there any disadvantages?
So I think the largest negative which I have seen in a mutual fund investment is typically fund managers are benchmark hugging, especially in large cap investments. When I say benchmark hugging, what it means is that they are not able to take differential calls when the situation so requires, because they are more afraid of underperforming than they are greedy of overperforming. So they will actually want to be close to the Nifty, not beat it by a very good margin, but not definitely not be below that, which actually leads to suboptimal decisions. Second thing which we have found is at certain times, say if you've invested in a mid cap fund, now the fund mandate is to invest into mid caps. Now, irrespective of how the market does, they will be investing largely in mid caps. Even if the entire mid cap index is very expensive, still a large portion will still be in mid cap. ये एक बहुत negative point है, because at this point they should actually exit in the right interest of the investors, and this money should be kept as cash if there is no good avenue to invest in. And this is typically where active management of mutual fund comes in, so that you can actually determine कौन सा segment अभी overheated है and doesn't make sense to take an exposure into.
The third new vertical we are starting is Hindu Undivided Family. What is Hindu Undivided Family?
So Hindu Undivided Family is a special entity under the Indian law which has a separate legal status, it has a separate PAN card and a separate bank account. It is taxed as a separate entity enjoying the entire tax-free slab which typically an individual does. It is created to create family assets. So an HUF is created by a male member of the family and 4 generations of that person automatically become members of that HUF.
So, when you say tax saving, how do you save taxes?
Okay. So to put a number to it, a well-structured HUF can help you save 40 lakhs over the next 10 years. Now, how does that happen?
Yes.
Essentially, every individual under the new income tax regime will get a 12 lakh rupee tax-free exemption,
Correct.
irrespective of what their source of income is. At 30-35%, your tax on a 12 lakh rupee income, if you are falling in the highest tax slab, is almost 3.5 4 lakh rupees.
Yes.
If you could create an HUF structure, reroute that income into the HUF, you could start saving almost 4 lakh rupees a year. And for the next 10 years, if you're able to do this, you could have saved 40 lakh rupees just in tax outflow.
When you say reroute into the HUF, what does that mean?
So what it means is, say, let's understand that by an example. So say if I'm a salaried person and if I get, say, 30 lakhs of salary a year, right? Now, if I am investing that money from my own account and if I'm getting an interest income on that, say if I've invested the money into an FD and the FD is giving me a annual interest, every penny of that interest will be taxed at 30%.
Correct.
What I can do alternatively is I can create an HUF to which I can give a gift as the karta of, say, 50 lakh rupees. And that HUF will then invest the same money in an FD. And on that FD, say if it is generating 6 lakh rupees a year, that 6 lakh, because it is less than 12 lakh, will be completely free of tax. So in my account, I would be paying almost 2 lakh rupees on that 6 lakh rupee income. Just as a part of the HUF, I have saved 2 lakh rupees by just rerouting some portion of the income into an HUF.
So, is the main benefit of an HUF just tax, or do you get other benefits?
Okay, so I think tax is the primary benefit, but two other benefits. One, which was the essence of creating the HUF as a structure, is it allows you to create family assets. So whatever has been put into the HUF essentially is co-owned between the karta, the co-personers, which essentially allows you to put assets which you want to distribute later on in life to your family members. The second benefit is specifically from a stock market investor's perspective, because HUF is a separate PAN and a separate entity.
Yes.
A lot of people actually use HUF as a new way to apply into IPOs. So there are many IPOs which come every year wherein the allocation is very highly sought after. And what depends upon application is how many applications you're actually able to do in that IPO. So a lot of investors actually use HUF as an additional file to kind of apply for that IPO and create that additional alpha for a very short period of time.
That's interesting. So, how do you create a HUF?
So HUF creation is very easy. Essentially, आपको एक agreement बनानी पड़ती है, which is called the HUF deed. You have to get that registered. Then you have to apply for a separate PAN card. Once the PAN number comes in, then you can apply for the bank, DMAT, and then you can start operating it. Largely, HUF कैसे run होगा, that is guided by the HUF deed which you have created, which is largely the most critical document which you need to form as a part of the HUF.
So, how do you form the deed? Do you get a lawyer? Who do you form it with?
So I think largely good chartered accountants are who we use to create HUF for our clients. The idea is that we want to understand who is there in your family and what assets do you want to park and how do you want to fund the HUF.
Okay.
Basis these three considerations, we understand what should be your HUF structure and we coordinate with professionals to help you create such a structure. It is a quick process, doesn't take more than 10-12 days to get the entire thing through.
Interesting.